to make a better scoring model. And the companies that are willing to spend money on data acquisition are the ones that are ultimately going to win the game. And let me see. So basically, that's the way how they were able to expand the business by adding more rows and also more columns to their spreadsheet. So this kind of information you can get about your customer, it's so much richer than the kind of information that you can get back in the day. And we all know that like Amazon and also Netflix and everybody else, they use big data to provide recommendation to customers. We all know about the Facebook and also Google use all sort of information about you to provide customized news feeds and also customized right search result and so forth. So why shouldn't the banks do similar things? So what kind of data could banks look at? For example, that doesn't appear in the typical credit score, like FICO score. Like for example, how many times you were late and so on. Let me give you one example. For example, suppose you are coming out from the good school, for example, Harvard Medical School, and you have a couple $100,000 or a couple $100,000 in debt, and you are 27 years old. What do you think? What does your credit score look like? Maybe it doesn't actually look that great because you have a very huge debt. No. So would you give a loan to this person? For me, I would, because if you apply for a job to a company, they will be interested in hiring you because you have a ton of human capital, which doesn't show up in your conventional FICO score. So basically, there is a company called SOVA, Social Finance, who incorporate these factors into their credit score models. So Netflix knows that the standard classification that they use in the media business, like males or genders, 24 or to 36, that's very crude data. That's so outdated. So we could do segmentation down to the individual level and identify the credit risk of an individual based on individual characteristic. So this is all these fintech startups are looking for new ways to evaluate credit. And this is, you have seen some of them out there, maybe you know one of it. But all around still, a lot of them have failed also, and a lot of them have been acquired and so and so forth. And what do they do? So basically, these are peer-to-peer. They call them peer-to-peer lending platforms, but they are not really peer-to-peer in the sense that you think they were algorithm lenders. They are lenders that write a platform and that integrates and assess different type of information and give the lenders the ability to use the different type of information to evaluate the credit risk. And then, the partner bank, usually they does much of the lending. So what about the location data? So you know that the location data is usually used by Facebook to do advertising, for example. I'll give you one example. For 1 in the morning, a guy goes to Pacific Place, one of the premium shopping mall in Jakarta, for breakfast. And then they have a meeting at the SGBD, the prestigious business complex, and then go to Mall of Indonesia, spend some time for shopping. If you are a bank, what do you think? That's very interesting piece of information. Could be good, and also a valuable piece of information. Maybe you think that this guy's unemployment, they just got fired because there's nothing to do and go around Jakarta. Who knows, right? But this could be important information. And then maybe suddenly the guy goes to a private jet terminal and then fly to Bali and spend a couple of hours at the Omnia Club, for example. So does this guy has a higher or lower default probability? I don't know, but I'm quite sure that it's different from the average person controlling for everything else. So why not incorporate that into the lending model? So now look at the regulation that tell you sometimes you can and tell you which information that you can incorporate and also that you cannot incorporate. But the amount of information in your Facebook profile, your LinkedIn profile is profound. So you can learn from this startup. So this is the startup from Africa. This Tala using the location data from your cell phone and also your activity from your cell phone to give a credit to people that have no credit history, because most of the people in Africa, they have no credit history, but they have a digital footprint and also digital crumbs that they are everywhere. And that's very interesting insight. And also, what about the personality? So maybe one of you knows about the big 5 personality. So take one. For example, the conscientiousness is the one of them. So people who are conscientious is all being equal, they tend to default at the lower probabilities. So how do I know that your big 5 personality is in a good condition, for example? Of course, the one way is I could ask you, are you consistent? Or yes, of course they will say yes, because they ask you. But then you can say, why then you are 20 minutes late for the meeting? Well, so how can then we can measure correctly your big 5 personality profile? How would you find out? So you could ask someone's friend, or you can ask somebody's family. Usually they are not very good at assessing your personality, but who's really good at assessing your personality? You can learn from the Facebook, right? So how do they know? we can, okay. There is the experiment done by the Cambridge. So the Cambridge did this with the real camera. They actually asked people to fill out the very extensive survey and then look at their Facebook profile and match them. And you can see that the result, the Facebook profile does a better job. So the algorithm does a better job in predicting your big 5 personality than every other person in your life, except for your spouse. So you can think about it. That's pretty amazing. So you can see in this website. So this site was used for the research and at Cambridge, which has been used by a lot. And there is also one example. So how to predict if a borrower will pay you back, for example. There is a site called the Prosper. So the Prosper, when you pay a loan, for a loan, in addition to answering all the questions about your income and so forth, they also ask you to fill out a little essay. Why should we lend you money, free from answer. You can write anything you want. So now, do you think that this word contain have a predictive value? Well, we can just simply add to our model and see if it adds value. You can do the text analytics, for example. Just like the words contained in the email predictive. For example, if you see there is a Nigeria, then you can see they are spam, right? Unless you are in the oil industry. So what do you think of these words? Which of these words are more likely to correlate with the borrowers? Who's going to pay you back? So what do you think? So of course, if everybody knows this, you can write a little book and get a loan on Prosper. Make sure you include this word, and you know, like job application sites say, they also do this, and maybe this approach is gonna probably not work after a while. But this studies published in 2016, so you can see which words do you think have a correlation with the capability or the willingness of borrower to pay you back. So if someone says, I promise I will pay you when I get out of the hospital, so you can like 90% sure that they will not pay you back. Okay, so they are, yeah, this approach usually come from the psychologist researchers, but you can as a data scientist, maybe you can just look the correlation, which word that have a high correlation with the willingness of pay the loan back. So we can see how the machine learning work in the fintechs and see how far they can work. So for instance, you can see here there is a differences between cat and dog. So basically you can start with the humans and see to differentiate which one is cat, which one is dog, and you can make a text for each picture, cat, dog, and so forth. And you can also have a loan evaluators on credit risk evaluators come and look at the very sophisticated profiles of the borrowers, and then you can also see a proof of don't proof and so on. So you can have a pattern which borrower have a capability to receive a loan. And using this approach, you can just replicate and then you can develop a model, right? Using this machine learning. And then with this machine learning, you can see that you have an image of a cat and dog, and then you have no longer need the people. You can use training data to generate scoring model. The similar approach with the model to give a loan. So and then maybe everyone will say that robot is taking over the world of finance job, right? Technology will cut 30% of bank jobs, say former Citibank's CEO. Bank wants to replace employee with robots. So do you think this is impossible? Maybe, but well, deep learning will never be able to completely replace the human, in my opinion. We will see why. Because there will be a role of human judgment. You can see this picture, right? This is just sort of confirm that we can see an example that machine is not there yet. So you can easily differentiate which one is cookies, which one is Chihuahua. So you know that you're not gonna throw a puppy into fryer, right? So we are still not completely there yet. So this is funny, but yeah, we can see at least we can still have opportunity to have a job for as a finance guy. So you can see also, this is one example that you can see this is a group of already, the Microsoft see or give a tag that this is a group of orange flower in the field. So because the algorithm is never see an orange sheep, right? So if the orange sheep, if it's orange and then it's in the field, then it has to be a flower. So there is a reason why the venture capital will probably never be completely automated. So there is a novel situation that are gonna require humans. This is the same example, okay? So you can look at this article, then we can conclude that the investment banking job are still safe so far, we can say. Okay. So now, what about the corporate lending side? So this is the things where really interesting, because the corporation generates so much information, even than the individuals. So they might not have a Facebook profile, but they have a sales data, they have inventory data, they have receivable data, they have payable data, and so on and so forth. So they have so much data. And then what banks do now, they go to a company and then say, give your quarterly financial report. You want to know what it is right now, and what banks are going to do with this report. So they're going to simply directly plug into your enterprise software and then get real-time information of the financial report, and they're not going to have a CFO to pulling off all the information in the end of the quarter. So they're just like push the button and then get the snapshot of whatever the company is. So the banks are going to do exactly the same. So we're going to see the real-time interest rate, real-time credit lines. They are built on real-time financial data. So we can say that who's got access to the data, to the enterprise information. So we can say that this is kind of a potential information to build the database to give loan appropriately. So now, what about the insurance? So, well, the same thing. You can see one example here that we can take one example in the US that you can, not most, all of them, but some of them is a truck in America or US, they have some telematic system. Why? Because not only we want to know where all of our goods are, but we want to know where all of our good truck are. So if we know where they are, and we also know how they drive, we also know how fast they are going. We also know whether the driver is a good driver or bad driver. And we also know if they're getting sleepy and if they're feeding off the side of the road, or so. The insurance company can use this data not just to sort of the provide guidance, but also to price the risk. So if I have a fleet of trucks and then I know how many are on the road and how they drive and what their contents are. And then I, as an insurance company, know exactly the probability of bad event and also the magnitude of loss that should it occur. And also this model is continually getting updated because whenever an event does occur, it gets fed into the database. So this kind of big data can help the insurance to provide or to give a real-time insurance rate. We can also learn from the health insurance. So there is a company in South Africa, Discovery Health, this one. They provide a bunch of better assessment of your risk. So if they have access to the things that are predictive of your health status. So what does the health insurance company do if or life insurance company do? They will ask usually they will ask your age, usually they will ask your gender and also the marital status and so on and so forth. So that's very outdated information. So what they really like to do is usually they will poke a hole in you and then take your blood and examine your healthcare status. And all of this kind of information, they can also do other things. For example, if you exercise or you eat the healthy food, those things should impact your expected healthcare liabilities, or at least be correlated with your expected healthcare liabilities. So, and then how can they track that? They can either ask you to self-report, or they can also ingest your data with the other source, right? We'll talk about the adding the more columns in our data. So what they did is they ask you if you, for example, if you join a gym, or then you give access to your gym data. So when you go and you swipe the card, and you know that, of course, they can then after swipe the card they can go home, but at least the insurance know that you go to gym, right? So this kind of information can help the insurance company to give a more favorable or health insurance premium. So they also usually give a discount when you do do exercise and or have the healthy life and so on and so forth. So this is one example. So basically we actually be able to adjust driving or life insurance prices based on the real-time information. When you have a lot of information, this also allows you to go into multiple products. Vertical and also horizontal in the financial institutions. So there was an insurance company in England that they wanted to look at your Facebook profile, and then they use it to adjust your insurance rates. And this creates some fluffing and somehow, the controversy, because they will have access to your privacy data. So, but in exchange, they will give you the better insurance rate. This is also an example. So, how many of you have a Fitbit? Now, if your insurance company and would it be great that if they can have access to your Fitbit, right? But the funny thing is that assume you apply for this program and then share your Fitbit data, and then there is also a loophole that if you do exercise, of course you have a good exercise or regular exercise have higher quality with the healthcare status. But big data, it doesn't always mean accurate data. You can go to a park and then took your Fitbit and put it on your dog, and then you can just relax in the park and maybe smoke a cigarette. So this is the disadvantages. So we will go to yeah, I think we can just go directly to the next slide. What about the investment clusters? Maybe any one of you knows about the Robo Advisors. So algorithm of the trading program at the institutional level through the high frequency and also through the long or short equity stuff is already settled. But now it's starting at the retail level to attract the individuals to these robo advisors, such a personal capital and also wealth front and also a betterment. If you study investment portfolio, you will learn a simple math, such how to do a mean variance, covariance, standard deviations, and also portfolio optimization. We can also then develop models from smart investor to earn 100 or 200 basis point optimum return. And then let the machine do the trading based on the individual unique portfolio that match with the individual preference attitudes toward risk, which usually you can get easily from the simple survey. But the best way to find out someone's attitude toward risk is not by asking how much risk do you like, but like usually banks do. But you can also look at their Facebook profile. If they say, for example, I love bungee jumping, then you can estimate how much risk they can accept. So this is one example. So what about the capital rising? So we can learn from this wonderful site called Indigo and also Kickstarter. Maybe everyone knows about it. So this is originally designed to help finance films originally and so forth, but now they are being used to finance companies. Okay, as you may know that originally this was, so you can also get some rewards and you can also prepay for your products, but now you can also access equity. Okay, so you can now access equity to this platform, sometimes called a peer-to-peer platform enabled by Jobs Act. So there are some famous examples of this company that have been started with the crowdfunding for products and also rewards, like People Smartwatch. And now we can talk about the payments. So payment usually, the first thing when you think about payment is when in the fintechs is because this is the most or the very much innovation in the fintechs is about the payment. So what is the payment? A payment basically is a transferring value. So transferring value from one person to another person. So usually what you do is you do it through some kind of payment system, right? So there are a lot of different payment systems out there, like credit cards, checking, cash, wire transfer, and so forth. So how do banks make money from this payment cluster? One way that banks can make money is by moving money. So where do they make most money? So we think about like check, maybe cash, They all have a different ways in terms of payments. You can also see the non-cash payment at the consumer level. And there have been a lot of disruption in the payment. And the question is, these sectors get majorly disrupted by this thing, what we call it a cryptocurrency, like blockchain and also the Bitcoin, for example. So, but before we go to the Bitcoin, the payment have been disrupted because now we have the Google Pay, we have the Apple Pay. This is amazing, right? So you just go ahead and think, then you've done, right? So sorry. And even Starbucks, they also have the Starbucks apps for payment. So how many of you think that this is a disruptive innovation? I think this is not disruptive innovation, because all of these payments are still working through these rails, which include the transaction acquirer and then the issuer processors, also all these intermediary party, right? So it has to go through the system, the same system that it did before. So when we think about like Apple Pay, for example, you can say this is so transformative, right? Because they are still using the same pipes, they're still using the same intermediaries, they're still using the Visa and MasterCard system to make this payment. So of course there's a negotiation. So you know who gets the bigger piece of the pie and so forth. And there are also quite a bit of data capture that can happen at the point of sale. So companies like Square, for example, they are actually collecting data every time somebody makes transaction. So Square makes no money on this transaction. So why do they do this? So to get the data, they then usually they can use the data for other services, like provide service to merchants, and also expand then the line of the business. Square's now getting into lending, and also that's when the small medium firms go to a bank and then they ask for a loan, and a bank usually they will go to Square and to get the information. Then Square can see all they're selling, like for example 3,000 cars in a day, for example. Then they will give you the money. So because again they have actual to whole column of the data that the banks can see, then they can give, they can get the advantage of this interesting or valuable information to make decision, of course. And then the question is, when do things get really disruptive? They get really disruptive when you disintermediate the payment system, like this sits in the middle. So where you have a read the closed system, like maybe PayPal is kind of dead, but still they still have the similar pipe. So for example, if I send you money through PayPal, as long as you keep your money in PayPal account or your Venmo account, you don't try to turn it back to your bank account, then it just stay in your PayPal account. It never has to go through the Visa or MasterCard. But still, that's still a pretty small percentage of transactions. But where the world is this taken off? So China. So you already see from the Dr. Ruth presentation that Alibaba and also Tencent, they are more disruptive than any pretty much company in the world. And also financial services sector and also the consumer financial sector. So if we look at the number of a mobile payment happening in China, you can almost can't pay with cash. I mean, if you go to store to buy a stick of gum, or you meet a beggar on the street, they will only take WeChat if you want to pay, or if you want to help out some poor beggar on the street. So now take a look at this amount of mobile payment happening in China compared to the United States. So this number in United States includes Apple Pay and also Google Pay. So you can see that this is completely night and day.
Pak Taufik, sorry, yes. Your time is 10 minutes left. Thank
10
you.
10 minutes left. Okay. So yeah. So if I'm Alibaba, you can see in this picture that Alibaba have all the information, right, from all the merchants. That means that Alibaba can access the credit quality of that merchants better than any banks. Okay, so if I can get that merchants to purchase its supplies from supplier using the Alipay, and then I have all the information about the merchants, and now I can pick out the inventory level of the company. And then if I have all my consumers buying it, I know how much money they spend. And you can find out how much, you can also, then you can have a good assessment of your credit quality. So they're building out these financial superstores. So this is the dream of the banks in 90s. So in the US, like Amazon is already in the business like this, although currently they are in partnership with banks. So now the most disruptive potential technology for payment is Bitcoin. Why potential? Because like I said before, that it doesn't have to go through anybody. So this is actually a pure peer-to-peer transfer fund. If I don't have Alibaba, I don't have Tencent, I don't have PayPal, I don't have Visa, and so on and so forth. It's just you and me, we transfer value. So if the internet is about the transferring information, then the blockchain or Bitcoin is meant to be about transferring the value online. This is why everyone was so excited about this Bitcoin, because you disintermediate everybody. But this is also a reason why there is so much investment in the blockchain space, because they have a potential. So the idea is that we don't have some central trust that usually, so we can directly, everyone can push their Bitcoin into wallet, in which case you don't need the bank. And if you're not the drug dealer or maybe tax evader, why would you use this? Because at the end of the day, it's still pretty cheap to use the current system here in Indonesia, the conventional one, because it's not that complicated. You have a pretty good value, anti-fraud, and so on. So, which is you can get this advantage with the Bitcoin. You can still have a reverse transaction. I don't think a Bitcoin will ever replace anything here in Indonesia, at least in short terms. Maybe also in other countries, domestically, but the bigger opportunity may be internationally. So you can see in this graph is about the remittances. So people pay. This is maybe the most potential benefit of Bitcoin internationally. So if you think about remittances, so people pay their relative back in other countries. Ton of money flying from the developing countries back to the from developed countries back to the developing countries. So remittances is the same level with FDI. So massive flow of cash. So how does it happen? I think, yeah, I'll skip this because we have a very limited time. So basically, you can see here that the average cost of permitting money from South Africa, if you are a laborer, and then there is about 16 something. So this is very, very expensive. So also in Japan, it's about 11%. So basically, if you see these conventional remittances, we can see that the Bitcoin have potential to replace this the conventional system. There is also a reason why it's so expensive, because to transfer money across the country, you have to go to the bank and then get the money to the bank account, and then you have to know if this bank, for example, your partner in the foreign country, the bank doesn't have account with another bank, you have to go to another bank which might account with the both banks. So basically, this will require a very extensive process, and of course, the more level or layers you have go through, not only do you have to pay fees in transaction costs, but you also have to wait until the end of the day all the accounts to clear. So the time is long. So this is the why everybody's like Bitcoin. But in my opinion, I think it's not gonna happen, because there is some issue about Bitcoin, for example. So Bitcoin will never be a successful currency because it doesn't have three fundamental characteristics you need for currency. So it has to be a good star value. It has to be a good medium of exchange. It has to be a good unit of account. So this graph, you can see that there is a higher volatility. So who wants or save the money in Bitcoin, even for a couple of days? So unless you are speculators. So this is the volatility of Bitcoin compared to the gold and also the euro. So I don't want to make money on these things. So what about the unit of account? So this is the price of a gallon or gasoline denominated with the Bitcoin. So that's why nobody actually denominates anything in Bitcoin. When we take Bitcoin, in which price, in what price? But for example, you will end up with the $6, for example. Then you convert in Bitcoin, and so on. So basically, as a medium of exchange, the world's largest Bitcoin, this is an example. So as a medium of exchange, the world's largest Bitcoin conference, they stopped taking Bitcoin for registration fee. So this is funny things. So of course, there is also we can say hidden costs. So the amount of energy that is needed is very huge to use Bitcoin right now. So you can see here that the Bitcoin, how much the energy consumed by Bitcoin is slightly above the Switzerland. So that's a lot of energy. So this is basically the actual pay for the energy that consumed by Bitcoin. So instead of being free, so you also actually have to pay transaction costs to get your transaction in the front of the queue. Otherwise, you might have to wait quite long. So, and then maybe you can also you should wait like 4 hours, 2 hours, 3 hours before you fully confident that the money, Bitcoin money, has gone through. So this is also quite disadvantages of the Bitcoin, because the huge volume of transaction. So also the number of transactions that Bitcoin can handle is very, very small, and therefore you can spend it if you want to spend it much. So if you want to send it back to your relative here in Indonesia, for example, you put Bitcoin and then you go to the store and you want to buy something like fruit, for example, they were gonna take Bitcoin. So you have to get it back into rupiah somehow. And this movement in and out between Bitcoin and also rupiah and your local currency, it's going to cost you. So it's going to cost you a lot more than simply running the money through the bank wire. So basically, this is the cost of the Bitcoin because of the spread. So just simple lack of liquidity. So this is also the average cost if you are using the Bitcoin ATM. So the average fee also quite higher.
Pak Taufik?
Yeah.
Pak Taufik, sorry
for
interrupting.
Okay. Yeah.
Could you? Yeah. We still have 1 minute maybe to.
Okay. Yeah. So yeah. I think this is the statement. So basically, we have if look at this cluster of the financial services innovation, we still see that there is a huge opportunity for us to create a more innovative way to create a business related to the financial technology. So I think, of course, there is a possibility that you can also create a new cluster. But at least from this cluster, you can see that there is a huge innovative way to expand or to create a new business related to the financial sector. I think this is the presentation from me. So yeah, there is a few slides left, I think, but at least we already covered most of the slide. So thank you very much for your attention. So Agista, I give the time back to you. Yeah.
Okay. Well, thank you, Pak Taufik, for the session. So now I will open the first term of the Q&A session. But before, I would like to give you information that we already opened our attendance list link. So you can don't forget to fill the list, your abstention in your attendance list. Then don't forget that this is module number 2. Okay, again, this is not module number 2. Okay, now I will read the questions. We have a lot of questions that we have in the chat box, but if you want to directly ask to our instructor, you can use the raise hand feature in the Zoom meeting. So we will ask to the committee to unmute your microphone. So the first question comes from Universitas Samratulangi, Indonesia. So from Tria Sekeon. Okay, Tria asking about the location tracking, Pak Taufik. So okay. it could be dangerous for our privacy and also our security of the data. And what do you think about that problem? What the solution that you can offer for this situation?
Yeah, thank you very much for the questions. So I think yeah, this is quite an issue that when we try to get access about the live question, for example. So basically, this is for now. The Dr. Ruth already mentioned before that there is a regulation that the try to protect the privacy data, but you you can also think or see in different perspective that, for example, if of course in some extents that if for example for insurance company, if they can have access, of course not the whole location data, but in limited level, when they can have access, so they can uh, uh, provide a better or a favorable contract to develop or to charge the insurance rate. So in this case, of course, there is an agreement that the insurance company should provide or follow the security standard in order to keep the privacy data, but at least holding everything constant, that for example the security is good and so on and so forth, then the customer us, we can have benefit that they can rely or access our risk based on the real information, not based on the average number. So for example, if you have a healthy life, you do exercise regularly, you eat the healthy food and so on and so forth, then you should enjoy by paying a lower interest rate, not paying a normal, not interest rate, sorry, insurance rate. So in that case, I think we can get some benefit.
Okay, thank you, Pak Taufik.
Yeah.
Also, we have another question from wait. Okay, from Zafran Nabil Fausan, Indonesia. Zafran asks about the technology cut off 30-second jobs, and it's really happened in our society. And how do we, the society, the worker, and how the country, our government, prepare the situation?
So yeah, yeah, I think that we're not too really worried about the job, because basically as long as we prepare ourselves with the skill, and also we not stop learning, and the job actually is not eliminated, they just converted into another type of job. So you have to really see or prepare, or at least have a prediction that maybe in the future this kind of job will in high demand. So once you know that this job have potential, then you have to prepare yourself with the particular skill, for example. So I think the job itself is not eliminated. They just converted into another type of activities or job, for example. See that the disruptive in the music industry, for example. Maybe the musician 20 years ago, they get the money from the cassette or CDs. Now they still the cassette is now is discontinued, right? But still the musician, they still get the money, get the revenue from for example the
Spotify,
music store, Spotify, for example, and so on and so forth. So basically, if the company or person can adapt with the new environment, then I believe that there is nothing to worry about.
Okay.
So yeah, I think that's already answered all the questions.
Okay,
thank you. I think there's two questions. Is it?
No, there are so many questions.
Okay. No, I mean no. I mean the last question. You mentioned about the question from this. About the regulation. Is it?
No.
The policy.
About
Government
the policy. Yes. correct.
Oh yeah, yeah. I think
Okay.
yeah. Of course, the government policy. You know, this the fintech
Mhm.
center itself is also the
Mhm.
part of the government policy. So one of the strategy from the government is they try to educate the society. So for example, by create a fintech center, so people can see and can learn from the research center. And also this is one of the strategy. Of course, our government Indonesia, they have a blueprint of the strategy to be adaptive with the disruptive. So yeah, that's it.
Okay. Okay, Pak Taufik. Okay, before I move to the next question, I just want to remind you that our attendance list link has already opened, and it's time for you to fill the attendance list. You can click the link that we share on the our Zoom chat box, and you have to fill your summer course student ID and also the module that you are joining now. The session is module 2. Once again, this session is module 2. Okay, we move to the next question. It's come from Argentina, from Fiorella, Universidad Nacional del Sur, Argentina. In South America, Fiorella thinks that the electronic or mobile payment isn't massively used as in Asia or in USA. But do you think that is it possible that one day in the short-term future will be replaced of all the usual way of the payment as cash?
Uh, yeah, I'm not really sure about the environment of in South America, but
Yeah.
at least if I see Indonesia as a developing countries, that the direction is in that way, that because there is so much benefit when the people use the cashless mobile payment. The consumers they enjoy so much benefit, like the security and so on and so forth. So basically, I believe that directions will be on that way. So I think in maybe in 5 years in the future, I believe that the cashless payment will replace
Yes.
the cash payment.
Okay.
So yeah,
Okay, we move to the next question, Pak Taufik.
yeah.
Okay, before we move to the next question, if you want to directly ask to the Pak Taufik, to our instructor, you can use raise hand feature, guys, and then we will ask to the committee to unmute your microphone so you can ask directly to our instructor. Okay, next, we will move to the Seun from Nigeria. Seun said that currently I work in a payment firm in Nigeria and I am new. I think I'm new from the peer-to-peer lending business. So what are the limitations to this arm of the financial business? I think it's kind of the what the limitation of
Mutation of
the
peer-to-peer.
peer-to-peer lending in the
Yeah.
business.
So yeah, so we already see that this innovative way is give so much benefit, but there is several issue. One thing is it's also happened in Indonesia that this is about the privacy. So of course the regulation body should aware of it. So one case is about the privacy is that the the for example the peer-to-peer company, they usually have access to the contact number of the borrower. So this is because if the borrower uh, uh, doesn't aware that the company have access to their phone and then have access also to their contact book, then it could be also the privacy issue, because there is so many cases that, for example, if I borrow the money from peer-to-peer lending, and then in some certain of time I cannot pay the loan, then what happened is that the company, the lender, they not only try to call me, but they also try to call anyone that are in list in my contact. So for example, my mother, they contact my mother that I have a loan, that I cannot pay the loan, and so on. So basically, this is the issue of the peer-to-peer lending. So basically, the most important thing is that the customer, they have to aware that there is a risk. Also, there is a certain part of the agreement they should aware of it. So this is we need to educate the customer to not only the benefit, also not only in the technical things, but also in the risk of the financial technology.
Yes. Okay. I think it will be the last question. It's still linked to about the peer-to-peer lending, especially lending in Indonesia. From Naufa, from Universitas Gadjah Mada Indonesia. Naufa asks about mostly the P2P lending company focus only on consumptive loans rather than productive loans. So what do you think, Pak Taufik, about that issue? Is it necessary to enhance more productive loans rather than enhance the consumptive loans?
Yeah, this is, I think this is also the good way that I already mentioned in the slide. I think that we can also expand this method, but I believe that I'm not sure at the moment, but if, like for example, the marketplace, the bigger marketplace in Indonesia, such as Tokopedia or maybe Shopee or Bukalapak, they have the information of the supplier, they have the information of the customer. So this supplier or this merchants, the marketplace, they know how much the merchant needs. For example, the cash flow and how much money to buy the inventory and so on and so forth. So if this marketplace can create the platform to facilitate the peer-to-peer lending, so they can also create like a gate that to connect between the merchant that need the money and also the investor, could be also consumer, could be also other merchants. So basically, in that case, it would be more beneficial to boost the productivity issue or productivity loan, for example. So I think we will see, I think in short term that this feature will be available in short term.
Okay, thank you so much, Pak Taufik, for your insight. Okay, I hope Tria, then Zafran, Seun, Fiorella, and Naufa, I hope it can answer all of your questions. And again, I would like to remind you that it's time to you to fill the attendance list. Don't forget to click the link that we have shared on the Zoom chat box. You have to fill with your summer course student ID, and the module you are joining now is module 2. Once again, this session is module 2. Okay. To all the students, this is the end of the class because of the limitation of the time. Our gratitude is addressed to Dr. Taufik Arifin. Thank you so much, Pak Taufik, for many insights. For many insights we can take from these sessions. And thank you for sharing your knowledge based on your experience. Hope you have a good day, Pak Taufik. See you.
You too. Thank you all. Bye.
Bye, Pak Taufik. So for all students, the next session will be started soon.